Hey everybody, JJ here, Bull Boom Bear Bust. It is Monday, March 10th. Thank you for coming back to the channel. This is going to be before the market opens. It's about 6 a.m. right now, and this is looking to be another bloodbath on Wall Street. Right now, pre-market is down almost 5%. That's 1,200 points off the Dow Jones. Now, in this report, we're going to talk about oil price plummeting, stocks cratering, a massive wealth transfer that is ahead of us. The panic that could crash the economy even if we don't see the stock market continue to drop. Also had to add something in here, job threat. There could be a threat to employment. We're going to talk about what that means. Gold, why is it not jumping? Is it jumping a little bit? Is it a safe haven? Is it not? Central banks hoarding gold. And finally, run to the safe haven metals or the dollar. Let's get into it. So everybody, thanks again. We are in critical times right now. This is going to be the test of all the things we've been talking about over the last 2 years. Is this going to be the beginning of the collapse? And if the stock market continues to collapse, this is one of the most dangerous times, I think, in American history, because you have the president out there who's been telling people everything is fine. He says stay calm. And if we do see an economic collapse go from here, again, a lot of people are not going to be prepared because so many people trust the politicians, and that's what I've warned about on this channel. Do not listen to what they say. There are agendas, personal agendas, their own agendas, and then broader agendas. And we're talking about from a global standpoint. Okay, look at central banks hoarding gold. There's a big play in action right now, and it's going to be a big wealth transfer. And if this starts to unfold, and that's why I put out there that this is a jobs warning, because right now companies are starting to feel the pinch, lower traffic. I went to one of my favorite food places, and they said they saw a 50% decline in foot traffic and business there. Now, whether you think this whole pandemic, the scare that's spreading across the globe, whether you think it's overhyped or underhyped, you still need to prepare, because if people panic, then we still could see massive problems as far as the food supply and product shortages. Now, also just want to mention here my Patreons. All my patrons, I just put out a recent update over on Patreon. I'll put a link down below. And over in that video, I talk about some things that I don't really talk about on this channel, and I explain the reasons why on that channel. So head on over there if you're a Patreon, if you want to connect a little bit more deeply here. Right, again, link down below there. Let's talk about oil prices. Oil prices are plummeting, and this could be another trigger to the economy. It could trigger job losses, not just in the oil sector, but this economy is really fragile right now. If you start in one sector, it could very easily bleed over into other sectors. Now, we saw the big retail decline in the retail apocalypse that we reported several times over the course of the last couple years. And there were theories out there saying that that was going to trigger the financial collapse because of all the layoffs and job losses. Well, we really didn't see that because banks really didn't pull back on the lending, even though there's a lot of defaults that are increasing right now in student loans and credit cards. Delinquencies are jumping. Auto loans also jumping big time, especially in the subprime sector. And we know that the banks are being heavily liquefied right now for a reason that no one can actually find out because it's not transparent. But there's likely a lot of consumers that are in very big trouble, and it's being masked right now. It's being hidden through the bank liquidity operations. And we know the Fed's balance sheet has been jumping up higher and higher, and I think we know the reason why. We can't prove it, again, because it's not transparent. There's no one in the world out there that can see into this except for the string pullers, except for the market makers, the manipulators that are conducting this operation here. But you can bet that there's something big happening right now behind the scenes. And I think this could be a big cover-up. Like I said, this economic global scare, this pandemic that's spreading, could be the cover-up for the financial collapse. Now, it's going to be, I'll be very surprised if they let it completely fall apart before November for the reasons I've said, many times. But if they were going to let it collapse, this would be the perfect time. And maybe they don't want it to collapse very quickly. That's why you see some big green days. You'll see, up days in the stock market and then down days, big volatility. And we see this volatility very often at the beginning of a economic downturn. All right, let's take a look at oil prices. This is the biggest drop in oil in my memory, and we did see a pretty big drop back in 2016. Let's go out to a chart here. And this drop here in late 15 into early 2016, oil price went from about $60 down to below $30 a barrel. Now let's take a look here at the recent drop, and this is the overnight price. Right now we're at about $32, so we are witnessing right now a big drop in oil prices. And I talked about the oil sector. What if we start seeing even more layoffs in the oil sector? That's one of the biggest industries, especially in places like Texas, and oil refiners that we have across the country. One bright spot could be falling gasoline prices. We'll have to see how that plays out. But demand has been falling off of a cliff because of the decline in freight and shipments. Right, also the travel industry is being pummeled right now. Right, less people taking vacations, definitely less people taking flights because people are scared. Barron's just did a nice run up on this, how workers could be in danger. Right, when people are afraid to be around other people, it's going to affect the economy from different angles. We're going to have people that are going to be afraid to go to work. We have companies right now that are pushing to try to find ways to get people to work from home. There's already a few companies out there that do it now. There's some insurance companies and some tech companies that have work at home programs, or what's called remote work. And companies now are really pushing their tech departments to try to find a way to get more people to work from home instead of sitting in an office and everyone being so close to each other. Take a look at San Francisco here. This is out of San Francisco, CBSLocal.com. San Francisco bans non-essential public gatherings at city facilities for 2 weeks. All right, this is just getting beyond insane. Now, you may think it's an overreaction. Maybe you think it's an underreaction. You know, I personally think that the leaders of this country should have been more forthcoming about the dangers of this, right? And maybe you think it's being overhyped, but even if it is, look at all the fear and panic out there. If people are panicking and emptying store shelves of certain items, whether or not this is overhyped or whether it's not, it's still, you're going to see food shortages and supply shortages just from the panic. Right, and again, maybe the panic's justified, maybe it's not, but we all need to prepare, I think, for a worst case scenario. And I touched a little bit more about that in that Patreon video that I talked about a few minutes ago. All right, unbelievable things are happening. Look at the 10-year Treasury yield now, the plunge to 0.5%, the 30-year now down at 1%. Now just think about this. Would any investor tie their money up for 30 years to get a 1% return? Are you kidding me? Right, just that alone, without getting into all the technicals and all the details, just that alone should tell you that the economy is really, really out of whack. When financial instruments such as this, a 30-year yielding 1%, it just does not make any sense for any wise investor to get into this, but we know it is central bank manipulation is what this is. And again, this could be the perfect storm that triggers this economic decline. And we talked about in our previous video a dead cat bounce. A lot of times when there's big sell-offs in the stock market, they'll have some green days, like we talked about, some volatility, making people think that it's going to go back up and it's a dead cat bounce, and they sucker people in who are buying into the so-called dip. I don't even think it looks like a dip yet. There has to be consecutive green days for it to be defined as a dip. So right now we're not even seeing a dip, even though we've seen a green day here or there. And today just looks to be really ugly, so we'll try to get back with it later in the day if we can, if we have time. But also get ready for zero rates. I mean, the Fed is slashing rates, and there's likely to be more cuts. Barclays is out there saying that zero rates is more likely than a recession. So he's saying that zero rates are going to stimulate the economy. Right, but we've got these two things clashing together. We've got the low rates, which are going to help people try to maintain their debt for longer. It's going to spur more borrowing and more debt. And again, it's not the solution. It may push things out a little bit. All right, so it's interesting. If they were really trying to crash the economy, then they would be raising interest rates. That's why I still think that we should look out here right? But again, I think most of you know this. If they raise interest rates, there's a lot of eyes on the Fed right now. Most people would then blame the Fed. They don't want to be blamed, so they're going to cut rates. They're going to make it look like they're trying to stop this. But the longer they stop it, the worse it's going to be when they finally let it completely collapse. Right? This could be a massive wealth transfer. Guess who is going to be the biggest beneficiary if we see a housing market crash? It's going to be corporations. BlackRock will be glad to come in and buy your home after you get foreclosed, and they'll be glad to rent it back to you, I should say. What about a safe haven? Central banks are hoarding gold. We know that. They've been hoarding it for a long time. They've been increasing their buys on the gold and precious metals. Is gold a safe haven? Are people going to run to gold and silver? Are they going to run to the dollar? Well, let's take a look at a quick chart here before we wrap this up. According to this chart, the dollar is still the place to be. Look at the financial crisis, what happened here. We saw deflation in the stock market and home prices, but we saw the dollar strengthen here right in this shaded area. People run to the dollar. Look what's happened since then. The Fed, massive money printing, massive stimulus. And yet we see the dollar strengthen, right? Not drop. So the dollar is still, it's still the shiny tool at the top of the junk pile there. It's strengthening even with massive money printing. And right, it's interesting. Leading up to the financial crisis, we saw a steady decline in the dollar along with rising home prices and rising stock market. Now we're seeing rising home prices, rising stock market over the past few years, with a strengthening dollar. Of course, the last few weeks, a bloodbath in the stock market. All right, but some very interesting dynamics right now. Are you going to the dollar? Are you staying in the dollar? Or do you think precious metals is the place to be? Remember, if there's deflation, who is going to buy your precious metals? If there's job losses and massive poverty strikes this nation, who's going to buy your precious metals? Are they going to go up in value, or are they going to also deflate? Right? I do buy some precious metals, absolutely, but I'm not 100% convinced that we're going to see precious metals, skyrocket or hyperinflate, unless they hyperinflate the entire economy. But how's that going to happen when there's job losses? Right? A lot of things to think about. Let's keep an eye on this, because this could be the beginning of the next big wealth transfer. We'll have to see how it goes. Thanks for watching. We'll talk to you very soon. Bye for now.